In this presentation, we will record deposits related to undeposited funds that had been entered in the past into QuickBooks Pro 2020, QuickBooks Desktop 2020. In other words, we had transactions in the past, including the entering of invoices that we received payment on, increasing the undeposited funds account, as well as sales receipts, increasing the undeposited funds accounts, which we will now deposit into the checking account, increasing the checking account, decreasing the undeposited funds account. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by selecting the drop down in the view menu and selecting the open windows view. Within the home tab, we're going to be considering the home tab now looking at the record deposits on the far right. So what we're thinking about here is we've recorded deposits in the past, and notice we've said that there's a couple different ways you can record a deposit. You can do so here with the deposit form, or you can use the check register. Now, if you have some type of deposit that you're getting directly that's not connected to some other types of transactions, then you may just want to go to the check register and do so. But note here, we have this little 5 indicated. What does that little 5 mean? It means that there's some transactions that QuickBooks has recorded that have been increasing the undeposited funds account that we should then apply out. And if we do so, opening this deposit slip at this time, QuickBooks will give us a little pop-up that will help us to complete that transaction. So we'll see that in a second. Notice what would create those that little 5 icon there would be items that we had started through the full process, invoicing and then receive payments, or through the quick process of just the create sales receipt. So as we have done in the past, we've created some invoices, and remember what the invoice does: increase accounts receivable, increases the sales. We're not going to get into inventory right now because we're thinking about receiving money and not the cost side of the inventory side. Then we get a payment, we receive payment. When we get the payment, we're going to be decreasing the accounts receivable because they have now paid us, increasing, you would think, cash, or in a way it's cash. However, within QuickBooks, we put it into undeposited funds as opposed to the checking account at this point. Why? Because we might have multiple payments we would need to then group together and then run to the bank, go to the bank. That's what we're doing now. Go to the bank with those items, group all the deposits that we have received during that time period, hopefully just like a day, in one grouping, deposit them at one time. And if we do it in that format, the grouping of the deposits will then match what is on the bank statement, so that when we do the bank reconciliation comparing our books to the bank, we'll have the same grouping of deposits. That's going to be very important because it makes things much easier. Or we had some transactions where we didn't do the invoice, but instead had people purchase, let's say, straight from the store from us. They came in, they purchased a guitar from our store because we sell guitars, and we simply created a sales receipt. The sales receipt then doesn't deal with accounts receivable, but simply increases the undeposited funds directly, and then the other side goes to the sales. So if you imagine that, you can imagine this increasing in our cash drawer as we make sales throughout the day, which we then take at the end of the day to the bank, making the deposit in the bank at the end of the day. Let's consider the reports that we will be looking at. Our main reports up top. We're going to go to the reports. We're going to go to the company and financial and scroll down to the balance sheet. Within the balance sheet, we're going to change the dates up top with the customized report field, changing the dates from 01/01/20 to 12/31/20. So there is our range. Selecting that, then here is our balance sheet. What we would expect here is, of course, the cash to be increasing, the other side going to undeposited funds decreasing. You'll note undeposited funds represents cash we have in the cash drawer or checks that we have received. Hopefully we do this on a daily basis or fairly soon. Notice we have a lot right now for a guitar shop that we need to go to deposit. These are the items that are included in undeposited funds. Undeposited funds is an account that should be going up and then back down to zero often. So if you have something in undeposited funds, it should represent that you're holding on to cash that you haven't gone to the bank yet with. If it doesn't, then something went a little wrong, and you'll have to go back and figure out what happened to clean up the undeposited funds. For us, these are transactions that we have received, and we're now going to be taking to the bank, so we're going to group them up a little bit differently, however. We'll take a look at the profit and loss. Note that the profit and loss should not be affected by this transaction. Let's just consider it, however. We're going to go to the company and financial. We're going to go to the profit and loss, the income statement, and that dates are going to be 01/01/20 to 12/31/20. There's going to be our profit and loss. Even though we're going to be depositing cash, we're not going to record anything up here because we already recorded the sales when we created either the invoice or the sales receipt at the point in time we did the work. Then the other report I want to consider as we go through these items and get used to opening over and over again is the accounting and taxes and the trial balance. Because this is the one we get to see very easily, 01/01/20, 12/31/20. Basically a chart of accounts. Checking account will go up, undeposited funds will go down. Back to the home tab, and we are just simply going to select the record deposits. Now this can be a little scary for a while until you get used to it, because when you select record deposits, you get kind of this pop-up thing that's going to say, hey, you have these items that were increased in the undeposited funds. They were created either from a payment type form when we received the payment, or a sales receipt form. So they actually happened either on the first step when we got paid in the store, sales receipt, or when we got the payment, second step, invoiced, and then payment. So what we're going to do is we're going to say that, now normally if we went to the bank, we would group all these together, but I just want to show you the different grouping items. We're going to go to the bank first and group these together as we think they're going to be appearing in the bank statement. So if we, for example, if we chose these two and grouped them together, the 420 and the 208, and then said okay, then if we go to the deposit within the checking account, it's going to be the sum of those two, or the 628. So we're going to take it out of the checking account, or it's going to go into the checking account. This is a deposit. That's going to be the default. We only have one cash or checking account. That will be the account that then will be selected. We're going to say the date is going to be the 17th. So I'm going to go up one by selecting the plus on the keyboard. And then these are going to be the amounts that will be involved. The total then that will be deposited will be the 628. This is a deposit form. The deposit form means that the checking account will go up. Whenever you see a deposit form, it'll typically be the checking account, if you only have one, will be increasing. The other side of the deposit form will be driven by these accounts, which these accounts are, because we auto-populated from the selected items to the undeposited funds. So the other side will be undeposited funds, a cash type of account, which will then be going down. So we're going to say save and close. Let's see if it does what we would expect. Go into the balance sheet. If we go to the checking account, we double click on the checking account. We're then going to say that we should have that 628. Notice how it's deposited there in the checking account at 628 and not at the split amounts. That's important because when we compare our books to the bank books, we want to be able to match out what the bank statement says to the deposit grouping we have here. Double clicking on this, we can see that the grouping, or the two amounts that were deposited, were the 420 and the 208. Now you might be saying, hey, why would it matter? I can figure it out when the bank statement happens and comes. Like 420, 208, I'll add them together. You can do that for sure. However, if you have a lot of transactions, it gets pretty tedious, and you want to make it as easy as possible. So especially if you're dealing with credit card transactions and things like that, do your best to make this grouping easy so that you can then make the bank reconciliation easy. Okay, we're going to close this back out. And then the other side is going to go to the undeposited funds. So within undeposited funds, it then is going to be going down. Notice it broke them out here between the two items that are involved so that you can kind of match them, the 420, the 420, the 208, the 208. Selecting either of those, you will then go to the deposit slip. Closing this back out, let's take a look at it again. Closing this back out. Notice you can also go there to from the trial balance in the open windows. I just clicked over to the trial balance here. And this might be easier to see checking account and undeposited funds a bit closer. Nothing is happening down here to the income statement accounts. Let's do that again, depositing the rest of them. If we go back to the home tab, we'll notice the 5 turned into a 3 because it's saying, hey, there's 3 still that are in undeposited funds that you should be depositing. So we're going to say, all right, we'll deposit, checking on those. Pop up a screen, pops up and say, hey, these are these 3 items that we think that you should be depositing given the fact that they're in undeposited funds from the prior transaction, sales receipts, and the received payment. We're going to deposit all of them. I'm going to check all of them off, deposit all of them, which will be for the $20,500, and say okay. So there we have it. The date, I'm going to keep the same at the 17th. And so that is it. So it's going to have these three. 20,500 will be the grouping that will go into the checking account. Let's check that out. We're going to say save and close and see if that is indeed the case. We're then going to go over to the balance sheet. We're going to see up top in the checking account and double click on it. Within there, we see the 20,500. There's the 20,500 grouped together. If we double click on that number, we then get to the detail of it, the three checks that are there. Closing this back out, the other side then in undeposited funds. Notice undeposited funds has disappeared now. Why? Because it went to zero. It's no longer there. That is one reason it's really nice to, the profit and loss, or if you go to the trial balance, then notice the trial balance default settings within QuickBooks will actually keep the zero there because there was activity during the time period in undeposited funds. So anything that there was activity in, it'll be there. It doesn't mean all the accounts are here. It just means that if there was activity within the range of period that you are selecting, it will have that account. And if you double click on it, then you're able to use the auto zoom and you can see the activity. Notice it breaks out once again the detail. So the 5,000, the 5,000, the 7,7, you can see the detail in this report. It doesn't group them all together as it does when we deposit in the bank account. And if we double click on any of these, we see our deposit form. Closing this back out and closing this back out. Note also that if you wanted to look at some kind of account, of course, that wasn't here because it doesn't have any activity in it, you could go to you'd have to go to basically the lists and the chart of accounts. And then these are going to be all of our accounts. The only numbers over here are for the balance sheet accounts. The income statement accounts aren't going to have a number because we haven't defined the time frame that will be here. And then you can go into these accounts and look at the activity. This is by register. You can look at the activity within the register. So just remember, obviously, when we're looking at the reports, even the trial balance doesn't reflect all the accounts that are involved. However, does it reflect, even if there's nothing in it, the accounts that have had activity in it during the time period that we are covering.